Alrighty guys, welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the one and only Lucid Motors. Now, this company is down about 10% as of Thursday, and I definitely think this is due to the massive sell-off because of the earnings. Now, during this time right in here, you may notice the company did release some earnings. This stock went from about $20 all the way down to $17.42. It did get a little bit of some buying pressure ever since it hit about $17.60 all the way up to about $18.81. Now, the reason why we've seen so much sell-off from this stock is because of this. Right now, they plan to make about 6,000 to 7,000 vehicles, and this is not good because they previously stated that their goal was about 12 to 14,000 vehicles. And I understand, yes, we're not going to be hitting that goal, but here is what the CEO said. Quality must take priority over value as a luxury brand. So I definitely think that is good to hear, because you would rather have high quality cars rather than terrible cars, in just massive amounts of quantity. So personally, I don't think this is as big as an issue as it is. But you'll notice that this stock here over the past couple of weeks and months has been getting obliterated. The stock went from, $60 all the way down to 18, but you will notice it does have some pretty heavy support right in this price. Right at about 17.80, you'll notice that it just has heavy amounts of buying pressure. So every single time, right, it comes in contact once, twice, three times, and then it sells off, curls back up, establishes some more support at that 17.80 mark, hit it once, hit it twice. Now we're curling back down to see this thing kind of tap it here. I definitely think that this is very, very interesting. This could represent a decent opportunity to make money in the short term, right? As a possible swing trade to buy in at, 17.30, sell it near the 20s, risking $1 to make, $3-4. I think that's a better option right now than investing into this thing for the long term. I definitely think with the electric auto space right now, there is so much competition. That is the thing. It's great for consumers because we can pick and choose the best car that meets our needs and goals. But as an investor, it makes it very, very difficult because there's so many options out there, and you could be right on the sector, but wrong on the stock and the company. So I definitely think, guys, Lucid for me carries so much risk, right? Anytime you invest in a startup, right, where the company actually lost about $555 million, which is better, right? Because they were expected to lose about $619 million. That's good, but they're still losing so much money, and it takes billions of dollars to get companies like this off the ground, right? Looking at their earnings, you'll notice here they lost that earnings. On this earnings, they did do better on the revenue, but missed on the earnings per share. On this one, missed. On this one, missed revenue. So you will notice that we've seen so much volatility on these earnings. Some popping off, some selling off, popping up, selling off. So I definitely think that is the issue we face with it. Personally, if I was going to invest in the auto space, in the electric auto space, I think that Tesla, Ford, GM carry a lot more potential. They may be more stable. They may not have as much growth, but what you're going to have is that pretty much that stability, not having to worry about it. With a company like Lucid, this thing could easily fall back down to $12, $13 a share, or it could pop up back up to $57. So my strategy is this, right? I think if you're going to invest into Lucid, I have shares of Lucid, dollar cost average them, meaning invest on a weekly, monthly basis into this stock. The beauty of that, if this stock pops up to $60, you have shares, you can make some money off it. But if this thing continues to sell off, you're averaging down that price. So when it recovers, you're going to be making a lot more money. That's the best way I found out to make money off these volatile stocks. But invest under 1% of your portfolio, meaning for every $100 you have invested into other stocks, other assets, put $1 into this. And I know you might be saying, well, Carter, you're not going to make any money off that. Trust me, if this thing pops up and becomes the next Tesla, you will have shares to make money, and you can always buy more. And on top of that, if this thing tanks down to $0, you're going to be like, oh man, thank goodness I did not buy more of that. So have that option. If you find it very, very difficult to pick and choose, different different stocks in the electric auto space, they do make several tickers. One that I personally like is ticker symbol DRIV here. This one just invests in the general electric autonomous driving and electric auto space stocks. So you'll notice we've seen a ton of growth. Lately, we've seen a lot of sell-off just due to the market conditions. The S&P 500 selling off, Dow Jones, NASDAQ, all these companies selling off. We're just following suit with this ETF. So personally, you're going to be getting a dividend as well. This is where I would rather see you guys invest. If you're looking for a long-term play, something like this or Tesla, or those other companies. But that's kind of what's going on with Lucid and giving you guys my honest opinion of should you buy that stock. So I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel. If you have any questions, let me know down in the comments, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.